You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. That rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. If you're paying attention, that's not every 2 weeks. That's twice a week. One of those confusing terms out there. So twice a week, we bring you the latest in haps from the world of options, some unusual activity, break down what's trading, some education, some strategery. We even answer your many legion of questions covering all sorts of topics. Mix it all together, stir it up. You got the heady brew. That is the Option Block. My name is Mark Longo, coming to you from the Options Insider Radio HQ, our studios here in lovely, somewhat chilly, but it is January, Chicago, of course, the options mecca of the known world, at least for the foreseeable future. Slowly eroding over time, but we're still leading the charge over here. And of course, here at the old Options Insider, we produce a wide array of options-oriented content. Not just this show. I know it's hard to imagine we do more than the Option Block, but we do. A lot of it can be found over there at our flagship portal, theoptionsinsider.com. Head on over there, read about, I don't know, options activity in crude oil perhaps, or some breaking news from the options market, or breaking down some cool UA. We got a lot of it up there on the site, some great education and analytical articles, some volatility digest, futures, what's going on in the world of futures every morning, all kinds of fun stuff. It's all up there for your reading pleasure. And of course, once you've sated your lust for options knowledge, options information, all free, by the way, then you click on that Insider Radio Network tab, and you've opened up the universe, the Narnia-esque universe that is the Options Insider realm of content. 13 fine programs for you to choose from, including coming up on 500 episodes of this here Option Block program. We'll have to plan something fun and indeed spectacular for the 500th episode Palooza. And of course, we're available all your favorite outlets, iTunes, TuneIn, Stitcher, etc., and so forth and so on, including the app stores for all of those major programs, or platforms, I should say. So if you have, let's say, a favorite device, we have an app for that. So go grab it and download it and check it out. And of course, while you're listening, while you're streaming, send us your questions, your comments, your insights. We love to hear from you guys out there, our listeners. You guys are the reason we do this, after all, aside from the legions of dollars that flow our way, of course. And joining me on the old program today, he gets the Trooper Award for being on the show. Once again, beaming in from the hinterlands, sans power, sans anything approaching a modern convenience. Even outhouses are broken out there. All he's got is his smartphone, yet he's still managing to join us today. That's how committed he is to the cause. Listeners, none other than the Rock Lobster himself, Mr. Andrew Giovinazzi. Welcome back to the show. You get the salute today, Mr. Rock Lobster, and also our condolences on your broken outhouses.
Yes, I know. The no power is a bummer.
Have you been without it all day?
Yeah, for about 24 hours now.
Oh, so make sure you get eaten on all that fun stuff in the icebox.
Yes, I went generator shopping.
That's not a main staple. I don't know what is. Hitting the LL Bean store, grabbing some lobsters fresh out of the ocean, and of course, picking up a generator.
Yes, it looks like I'm going to need one. So anyway, That's where we find ourselves.
I can say that and mock that as a born and bred Southern New Englander, not a Northern New Englander like you, but still, we had cause for a few generators there in sunny and tropical Southern New England as well. So I can laugh because I know. All right, and joining us from a little bit closer, still the hinterlands, but the scenic hinterlands, lovely and scenic as they may be, known as St. Charles, Illinois, comes Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, how are things? Welcome back to the program. Hopefully you still have power.
Oh, yeah, we still have power. We make our own power in St. Charles.
That's true. You just had the power of good expectations and good vibrations out there.
Absolutely. It's the happiest place on earth.
Speaking of happiest places, you can maybe call the street that today. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Today, of course, being Monday, January 11th, for all of you playing the home game. And yet another example of why we try not to write up some show outlines too early in the day, because the narrative shifts, and then it shifts, and then it shifts again. If you wrote up our show notes, let's say before the noon time here in the central time zone of the session, you would have probably written about a nice rally in most of the major indices. Towards the latter portion of the session, you would have said, oh, wow, most big names really reversing those gains. The big rally losing steam, S&P selling off, well off its highs, 20-odd handles off the highs of the day, et cetera, et cetera. And then if you came back again the last half an hour or so of the day, the final minutes of the session, you'd say, wow, rally back in gear yet again. So a little bit of fun, a little bit of mixed sentiment, a little bit of volatility available on the old street today, with most of the major indices closing up on the day, which is a bit of a change from just a short hour or so ago. The S&P up about a quarter of a percentage point or so. The NASDAQ and the Dow up nearly half a percentage point. And after all that back and forth, all that volatility, we have VIX cash inhaling a little bit today, off nearly 3 handles on the day after getting up, let's see, as high intraday as, over the 27 handle, 27.39 to be precise, intraday. So giving up that and a little bit more on the day today. So really weird one. Depends on where you looked. That really gave you your narrative. That's why it's such a different beast to look intraday versus close to close. And it all really depends on your frame of reference of your data set. Today's close to close data may not really show that much. It belies the legion of activity unfolding intraday. That said, perhaps we'll start in the closer hinterlands to allow the rock lobster a little time to adjust himself to his no power surroundings. Uncle Mike, a lot of things kicking off today. What really caught your eye in today's activity?
Early in you're right. It was quite the intraday battle throughout the day today. But I think the big story at this stage, China's market's down 5% on the day. So even though they've taken away their make it up as they go circuit breaker, whatever they call it, it's still down 5%. So there's a lot of reason to be concerned with China. The other thing that's obviously a big story right now is oil. Oil is down 6% on the day today. I'm showing it trading around the 31 level at this stage. So oil and China continue to be the big stories. Now, what's interesting about this is a couple of things. The first thing is that with those big moves, even still, markets are relatively flat today. And actually in after hours trading, it appears that SPY is down a whopping 2 pennies. Oh, now it's back to even again. Oh, now it's down 2 pennies. But either way, we're relatively flat on the day in the S&P. So that's one thing that's interesting. Could it be that maybe the market just wants to take a break, and maybe there are some buyers, and then maybe oil and China are a little bit early on the coming downturn that's going to be this week? Who knows? The other thing that I found interesting today has been bonds. Bonds, or TLT, is down 1% on the day. So a lot of times when there is some type of a panic going on in the marketplace, like there has been the last couple days, or so far this year, I should say, S&P is down around 5 to 6% on the year. So to me, that's kind of a panic over the course of 1 week, especially when it's the first week of January. The thing that I find interesting is that with TLT, no one is necessary. I shouldn't say nobody, but there's very little flight to safety in theory with longer term government bonds. TLT closed 2004 15 at, I'm showing here, the close is 120.58. It's at 122.01 right now. So what that tells me is that even with the downturn in the market, the stocks that we've had, there's not a very big rush to safety. And that I'm thinking it's from the fact that that the market is expecting there to be a more rate increases based on what's happened over the course of the last week. So where's the money going? Andrew, I'm going to leave you with that one.
Under the mattresses.
Spoken like a true Mainer with a generator.
He's too busy shopping for generators. He can't look for where the flight to quality is right now.
I think honestly, there is some, I think the money is kind of going out the door, out of the markets, out of financial instruments that have had a long rally, and it's taking a break. Like, you know what? Maybe cash isn't a bad position. And I can't, it's hard to find where the leader's going to come from. In the mid 2000s, every upcycle has kind of a leader that starts somewhere. Most of the U.S. stock market, probably since the 50s, has been technology is led. Then it always gets overbought and then it sells off. And, that happens, ad infinitum. I don't know, probably since the 1850s, since the railroad, since that was the first big technology boom. So right now, okay, we've ridden Google, Apple, Facebook, Amazon, to pretty good levels. They've all come off their highs a bit. But, until I think we start to see some earnings happen, where's the leadership going to be? You're going to have a rising interest rate environment, so financials should be doing better, yet they keep smacking the banks. Earnings are coming out this week. I think JP Morgan is Thursday. So, there was that brief respite when the Fed's like, okay, we're going to raise because everything's okay. And all of a sudden, bad news is bad news again. And that's the reality. China going down 5% a day, I'm sorry, but that's not good news. It used to be, the Fed's just going to keep rates low. Well, now the Fed's kind of saying, go hang. Commodity prices keep falling through the floor, so that's not an inflation problem for the Fed. Although that could be a demand problem at some point because it's a big part of the economy. But I mean, look around for what you want to buy that looks like it's going to grow. Obviously there's always going to be the growth stocks and stuff like that that can catch fire. But, S&P 500's had a pretty good run. The commodities are on the floor and they're still suffering from a lot of overcapacity. So nothing's happening there. So it's hard to get get the juices flowing for the big rally. And also, of course, my own closet theory is the market looks more at government spending now, even though nobody says it. But if you trace the recent sell-off we've had, it's almost to the day when Congress decided to they're like, okay, we're going to bury the hatchet and we're just going to spend a ton of money for the next 2 years. So we're not going to worry the elections anymore. We're just going to spend a lot of money and nobody is going to mind the cookie store. And I think there is, that, I don't think it's in the front of everybody's mind, but I think certainly it's in the back of the mind if we can't control spending. And right now you're just going through a shift where like that old paradigm of the Fed, growth in China, rising oil prices, made the value of all those companies in the S&P 500 pretty lofty. We're taking a big chunk of it, making it go away. So, there's a lot of real reasons for the market to go down because, the value of stuff is going down. Oil, commodities, we haven't seen a leadership out of the financials. Tech can't lead because it was already, I think all-time record for NASDAQ not very long ago. So, where's the leader going to come from? There, I'll leave it there. You know where the leader is right now? Volatility. That's the leader.
There you go.
A VIX-driven market.
That check from the CBOE will be coming forthwith, Mr. Rock Lobster.
Exactly.
Volatility is an asset class. It leads the market.
Yes, full disclosure, I was a CBOE market maker many years ago, so maybe I don't want to.
There you go. It's infected your brain like it has the rest of us. Well, yeah, a lot of things to hit on there. I do like your point about the make it up as they go. Circuit breakers, Uncle Mike. Kind of the whole point of a circuit breaker, I thought at least, was to provide some stability. But you're right, when they keep changing it up, and today we're going to have it, tomorrow we're not, tomorrow it's going to be 5%, then it's going to be 7%, then it's not here. That kind of defeats the whole purpose of what I thought was having a circuit breaker, which is kind of providing some stability back into the marketplace. Perhaps I have a Pollyannish view of the marketplace. I don't know. But you got to put a circuit breaker in there. It should at least be perhaps reliable. But yeah, of course, the other point about the commodities is well made as well. We had a big write-up on the site. Our friends over there at Reuters coming out with a big breakdown of what's going on out there in crude and Brent and WTI and all those products. You can, of course, find it over there. Reuters linked. We break down all this stuff on the Options Insider as well. Listeners, you can read our stuff there as well. But again, they're kind of breaking down some Reuters data showing that implied vol out there is at the 95th percentile, not just for the past year. This is particularly out of Brent, but I'm sure it's pretty analogous to WTI as well. 95th percentile for the last decade. That's getting up there from an implied vol perspective. Only consistently exceeded this level during the, as you might imagine, the financial meltdown of 08, 09. It's at about the front month at the money implied about 53%. That's up quite a bit, almost half from where it was at the end just of 2015, up from 34% just in mid-November. So front month at the money implied really rallying up. This kind of goes back to the narrative we've been hitting on vol views and on long and short futures options and others. There's still a market premium out there in terms of crude oil options extending as far out as you want to look, certainly through the calendar 2016, where people have just been buying puts. And we were kind of remarking even on the last vol views that, hey, there's not that much left to go on the downside. People are still buying these puts. Downside put options still pretty hefty compared to calls. We haven't really seen that moment yet where the bid flips to the call wing yet. It hasn't happened. Doesn't seem like it's happening anytime soon out there. In fact, if you look at where all the commitment of traders reports are leaning, both in Brent and WTI, you'll see that still a ton of open short positions out there for a lot of hedge funds. Again, that's going to lean on the price of crude in the near term as well. It could eventually, if they have to start getting squeezed, it could eventually bring the free fall to an end. But right now, it's leaning on the price of crude. At the end of 2015, 348 million barrels, near record short position out there in Brent and WTI, the combo, 348 million barrels. Again, that's the CFTC commitment of traders report. That's been reduced down about 5% from the record 364 million barrels set just a few weeks earlier. So people are still leaning heavily short crude, despite the fact that we're hovering near record lows, and people are still lining up on the puts, despite the fact that we're hovering at near record lows. So it's kind of an intriguing time. Uncle Mike, what does this do to you, the ever optimistic oil bull right now? Are you just taking advantage of this to perhaps load up on some cheaper than expected upside positions, some calls or whatnot? Or are you still playing the wait and see game? What's your take out there in XLE land right now?
If I could buy more, I would. I don't want to make it so that I'm over allocated on it, but if I wasn't, I'm allocated about as much as I care to go with most of my clients. So if I could buy more, I would. I think that, I'm just looking at a chart of this, and that when we were in 2008, I believe it was May of 2008 is when we topped out. Let me bring this up again real quick. We topped out at the $147 level. I'm sorry, July of 08. And then we went from 147 down to a low of $33.20 per barrel in January of 09. Now we broke through that level today. So this is we did break that. So today was kind of a big day along those lines. But the last time we were at this level was January of 09, and it was around the level we are now. And between January of 09 and May of 2011, now granted, I'm going trough to peak here, we went from the low 30s to the 114 level. So with that, does that mean that we're going to rally that high in oil again? Not sure. I don't know if I don't think we're going to get that much movement that quickly, because you can argue and say that's when the Fed was just printing money and just the stimulus packages were going in, and that's when interest rates were becoming lower. So yeah, it was a different time, and oil being that low to begin with, I think was kind of an oversold movement to begin with. But in looking at it, the next level, not that I'm much of a technical type of person, but I really don't see us getting much lower. The next level of what someone could argue support would be around like the 26 level I could see, and that's in 2003. So we're looking at levels about that. So I really think, and then the lowest level that we have over the course of the last 20 years in oil was when it was at 1065 a barrel. And I'm showing that in December of 98. Now, I remember that. I went to college in Missouri, which at the time, I'm not sure if they do anymore, they had the lowest gas prices in the country. And I remember filling up my tank at 71 cents per gallon back in 98. So, if we do get down from the 30 level down to the 10 level, and all of a sudden people are paying 71 cents at the pump. Now, granted, health insurance is through the roof now, so you can argue and say, well, the money people are saving at the pump, they're blowing on health insurance. I could see that, but I have a hard time believing oil's going to stay down that low for a long time.
Yeah, it's kind of a frame of reference trade at this point. How long of a long-term hold is it going to be before it starts turning around? I think if you pick up XLE or just crude outright or some of the other indices out there, the ETFs you guys like USO or others, and just put it in your pocket for a longer term hold, it's kind of hard to argue. Eventually, you won't make money on that on these levels here. The question, of course, is how long that eventuality will be. A lot of the market, a lot of the heavy pro quote unquote paper leaning towards not anytime in the near future, which is an interesting one. And you're right about the gas prices, Uncle Mike. I filled up at a little over $2 a gallon the other day, and I was kind of lamenting, I'm paying over $2. And I said, wait a minute, I was paying for something not that long ago. So bitching about $2 a gallon seems so just ridiculous in this frame of reference. Speaking of things that people are complaining about out here in the markets, or perhaps not really taking the steps you might imagine. Of course, we're coming off the heels of the worst start to a trading year in market history last week, of course, for all the reasons we illuminated last week. The H-bomb threat, China Part 1, China Part 2. I guess today could be China Part 3 if you really look at it that way. Of course, we also had Saudi-Iranian tensions, a lot of things combining to really derail the market last week. And yet, despite all those sell-offs in the broad indices, we kind of touched on this a little bit on vol views last week too. People weren't scrambling to buy VIX upside for some reasons we illuminated there, but also people really weren't scrambling to buy a lot of downside protection in broad listed equity indices like SPY. Our friends over there at Bloomberg, everyone's looking at different frame of references for data today. The Reuters guy looking at one, Bloomberg looking at SPY today, and looking at just essentially how open interest and also put to call 15% below its 1 year average out there in SPY, which is kind of interesting. Of course, that average a little bit skewed by just the incredible madness of the August-September timeframe. Also, if you look at that timeframe, which was kind of the high out there when everything was rocking and rolling, we're about 5 million fewer contracts open right now from a net perspective out there in SPY than it was in mid-September, again, when it was just pure rocking and rolling time. Also, as you mentioned on vol views, not everyone really racing to buy upside in VIX, although some of that could be explained away by the fact that we saw a flurry of upside VIX call buying towards the middle end of December. So people, in many ways, perhaps if they wanted that protection, they already have it, and they're probably sitting on some pretty good hedges right now because VIX, as we said, has been rocking and rolling of late. But still, Uncle Mike, does that looks like the hinterlands have taken off with the rock lobster? While I scrambled to get him back, does that surprise you at all that no one's really out there scrambling to get protection in any of these major products?
No, well, no, it doesn't, quite honestly, because we've grown so complacent over the last few years that no one sees the need for it. I remember in 2009, if I talked about protection and people would actually listen to me back then because we're right on the heels of 2008. But these days, everyone thinks that, the market goes up forever. Everyone's gotten complacent. And to quote the book of Amos in the Bible, woe to the complacent.
Is that literally what it says? Woe to the complacent. That's a very literal Bible there. Woe to the complacent. A lot of woes being thrown around in the Bible. I think you probably pretty much could woe anything from a biblical perspective.
Do you think there's some umbrage in there too somewhere? Do you think is there a passage with umbrage in it? That's my question.
Ooh, that's good.
I don't know. I got to take a look at that.
That's good homework. Pull up your Bible quote search and see if you can find the Lord taketh umbrage upon ye gold sellers. Something.
By the way, just when we're talking about volatility, I was working with one of my clients. Well, last week when we were doing our vol study, SKU was at, let's say, the SKUDEX products. Remember you had those Nations guys on and vol views a while ago?
Yeah, the
Their
Voldex.
SKUDEX product was the low print it was the low print that I remember since they listed it, skewed dead flat with the volatility as high as it was on Friday. I think what you guys were just talking about, the people that do own protection have been selling it. It's been keeping the skew super flat, although it did fly a little bit today. I did get some reports from some clients in and out when I just, at least I could communicate with people via Skype. But very, very, we're talking volatility's pretty, it's at a fairly high level, and it's staying up here because anything can happen at this point overnight. I think with, I think that China is kind of a mess, and it's almost like a layer. I'm feeling it's like an onion, and the layers keep getting peeled back slightly, which is going to probably cause us more volatility. And at least for right now, I don't see it ending anytime really soon. So you got to take that into consideration, especially if you're, trading anything short term. I think you could still kind of trade volatility back and forth, but it's the days of I think we were laughing about this last week. 15 is the new 10 for VIX, and all for the first 2 weeks of the year. I think that's what we got already.
Yeah, if you guys were some of the people that were loading up on upside in VIX land out there over the last few weeks, particularly towards the end of December, you're laughing all the way to the bank, or at least laughing that you have some sort of hedge / kicker in place against the rest of your portfolio out there, which maybe perhaps isn't faring as well. All right, that's going to do it for the trading block here, and now it's time for us to keep on rolling into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that funky tune means it's time for the funky part of the show. Indeed, the Odd Block, the portion of the show where we break down what's weird, what's whimsical, what's kind of just downright head-scratching going on out there in the old world of options today. Going to kick things off in an area we were just floating around in, ye old VIX. It's been a while since we've seen VIX featured on the Odd Block today. Yeah, that's exactly what we saw out there today. Of course, VIX, ticker symbol VIX. VIX, hovering today, at least the VIX cash right around the 24.5, 24.30 range out there. I won't spend some time breaking down the futures. You guys can do that on your own, listeners. Of course, today was a rock'em sock'em day from a volume perspective as well, thanks in part to the trade we're going to outline here today. This is the name, as I've mentioned on vol views, and even on this program in the past, it hasn't really been lighting it up from a volume perspective the way you'd think, given everything that's been lighting it off. It did well Thursday and Friday of last week, and Wednesday to a degree, but that was really the earlier parts of the week, really below, well below ADV, which kind of surprised a lot of people, probably because no one was expecting such a robust start to the year. It's been averaging about 540,000 contracts a day, doing nearly 2x that today, doing 1.1 million contracts, 5.2 to 1 calls over puts. So that probably gets back to some of what we were talking about, the call action, and a lot of that call action coming over about 350,000 or close to it. In one size 1x2 vertical going up out here in VIX land today. In particular, it was the VIX 22 calls, paper buying 113,000 of those, paying $3.35. And then against it, selling, of course, the Jan 30 calls, selling one more time, selling them for 95 cents, still doing those 2x, so 226,000 contracts, total of 339 going up, paying net $1.45 for this spread. Didn't see any futures or anything else going up against this, so it looks like this all went up straight up as it appears on the surface. We assigned the greasy meatball himself to sniff into this one a little bit earlier today. You can read about it on the website, and he was talking to a few people to see if he could find out exactly what was up behind the scenes on this one, because there could be a lot of different reasons why someone would put up a 1x2 like this. Of course, we talked many times. In fact, it was kind of our VIX trade of the year last year, just our friend out there rolling his 1x2s over and over again. If you recall, he was on the other side of this spectrum. He was selling one, buying two, which makes you think perhaps this is indeed a closing trade. Someone perhaps coming in, taking off a 1x2, a short 1x2 that didn't really work in their favor too much. You can probably assume that, given all the big run-ups we've seen in VIX lately, that a short 22.30 1x2 isn't going to be exactly the most profitable trade right now. He talked to a few people out there on the floor, and they don't remember this trade going up, which is the other side anyway, at least. So perhaps it means he legged it kind of quickly and maybe a little bit quietly. There's a large open interest on these strikes, though, either way. So it does seem like he did leg into a spread, and perhaps he is indeed taking it off right now. We've also talked in the past on vol views about VVIX getting up there pretty high of late. That is indeed the case. Then he could be perhaps taking advantage of that to put this spread on. Either way, does kind of feel like a closing trade, Mr. Rock Lobster. I know you were kind of in the weeds today, given your hunt for a generator and whatnot. But what's your initial instinct, your initial inclination on this VIX 1x2, closing or opening?
I'm thinking closing just because we've had the rally today. Vol was higher earlier when we had, what do we have, a couple of down moves, and that would be the MO because you get out of it for a credit at this point. So, plus how we're moving on the clock and everything else, getting to January expiration for VIX. So it seems like it would make sense that they're taking this one and getting ready for the next one, but that would be my first impression for this.
Yeah, and it could be our old 1x2 friend perhaps having it not work too well in his favor and deciding not to roll this time but just close. That could be. We know he's sitting on some decent money from his big swing for the fences back in August and September, and it working out pretty well for him. Either that or perhaps someone piggybacking that trade, seeing how well it worked and trying to do their own sizable VIX 1x2 to the short, to the upside, and having perhaps not the best timing on this one. So it could go either way on that one. As we move on to our next name, getting a little bit more into a little more straightforward realm. This is coming up in Teva. No, not the maker of those weird outdoor sandals, but the global pharmaceutical company. Ticker symbol TEVA, of course, Teva. Closing right around 63.5 today, pretty much unched on the day, which is impressive in and of itself, given all the vacillations out there on the street today. This is a name that does about 11,000 contracts a day, doing a little over 20,000 today, so pretty decent volume, about 4-to-1 puts over calls. That should give you some hint of where our eye was drawn today out here in Teva land. In particular, what caught our eye were the January 64 puts going up some pretty decent size. Looks like paper buying the Jan 64 puts, doing it 7,700 times. Looks like this is actually in tune with the customer actually coming in a few weeks back and selling these when the stock was hovering around 66, 67, obviously about $3 to $4 south of that level. And back in, actually it was on December 22nd when the customer first opened to sell these. The stock lower, obviously those puts not perhaps looking as good right now. So he's coming in, deciding discretion, the better part of valor, and taking them off for, depending on where he got executed, between 20 and 40 cent loser on those. Of course, you do anything like that, 20 cents or 40 cents, 7,700 times, it's going to leave a bit of a mark. So our friend here, or perhaps his risk manager, deciding, yeah, you're done, close these puppies out. And so he's taking his ball and going home, pretty much closing out the entire open interest on that strike. So, Mr. Rock Lobster, what's your thoughts here on the no more love for these Jan 64 now in the money puts here on Teva?
Yeah, I think those are, it's I like your risk manager giving them a tap and say, you know what, maybe we just won't be short all these puts.
Yeah, that has a feel of the risk manager tap trade to me.
Let's just call it a day with these and let's see what happens. You know what? Since we'll still have money left, we can always sell them next month, which is a good thing to remember. But if you don't have any money left, you can't sell them next month.
Yeah, guys said, I know you saw that webinar on selling puts and printing money. I know you want to do it every month, but it didn't work out that well in this one. This one actually isn't that bad, 20 to 40 cents. We've chronicled many worse losers than that here on the old. I'm sure a lot of our listeners have had worse hits than that on some of their short puts. So, but it's nice and informative to see that even the size, quote unquote, money can take their lumps and get that little tap on the shoulder that you guys may get from time to time from the margin call from your broker. See, the big guys not immune to that either. That's why we like to highlight these every now and then as well. As we close it out here with a name you may have heard of, the Qs, aka the Powershares QQQ Trust ETF, of course, tracking out there in the old NASDAQ land. This is the name that does, as you might expect, a fair amount of paper, about 453,000 contracts a day, doing 728, so lighting it up out there again today. Not surprising, given all of that activity we saw out there today. And what we saw out here was one of my favorite personal trades. We saw the old bullish risk reversal out there in full effect. If I could scroll on down to the right strike, that would probably help. There we go. It was the Feb 85 112 risk reversal going up paper. Of course, sell and put, buy and call, doing it for 33 cents outlay, actually paying for this one, which is, let's see, interesting. I guess it depends really on the strike selection here, where he, the puts under. Hence his putting out a little bit of a debit for this one. Doing it for some size to the tune of a little bit over 30,000 contracts, about 32,000 total on both strikes going up. Sell and put, buy and call. Again, this is a straight up bullish spec here on the old Qs. We talked about many times on the show why we like this strategy versus buying the underlying outright for all the many reasons. We won't illuminate those for you again if you want. Go look up bullish risk reversal, perhaps hit up a guy like Uncle Mike and Andrew, and they could walk you through it in more detail. But still, interesting way, perhaps also a bit of a stock surrogate. You're not getting the full deltas for it, obviously, as you would with like an at-the-money combo or something like that. But you're getting a decent long delta here for little to no outlay, in this case, 33 cents. So not the end of the world. Not a bad trade either if you're a bit of a bull out there. Mr. Rock Lobster, what's your take on this? And also perhaps doing it naked on the put versus a put spread, or even the old Condor, or the Condor.
I always like a credit for those, but I mean, look at the strikes you're getting: 85 versus 112 for 33 cents. But I think you still can lose the 33 cents. 85 for the Qs at this point. It certainly, anything can happen, but I think that would put Apple at a 5 PE and Google be $500, Amazon $500. So I mean, they're drawing a pretty good line in the sand. But risk reversals I like for credits, because if the stock doesn't do what you want, if you have to put margin up, that's one thing, but I don't want to have to cost real dollars. So besides that, I mean, who knows what's going to happen. I think probably for a while the stocks followed oil. Now the stock market's kind of following China. It's not obviously collapsing to the degree, but it's not as expensive as the Chinese market is either. So, with the Qs, that is still the driver. I mean, those companies are still growing and earnings are coming out. So somebody could, it could end up, I would guess they probably are going to have a shot to sell that for more of a debit than more of a credit than they paid. Although they're probably going to have one little tickly time with it between now and then.
one brief moment where the risk manager may be hovering.
Just a little tickly.
You know what? A little bit of quick, brief technical analysis here. I was just looking at this one. I think I may have some insight into why they chose that 85 strike on the downside. Guess, Mr. Rock Lobster, perhaps Uncle Mike, what the low of the day was back on the flash crash in August for the Qs.
85.
Close, 84.74. So there you go. Our friend saying, you know what? I'm going to give myself just that much wiggle room to the downside. In case we have yet another flash crash in the Qs, I can at least say I was covered to that level. So perhaps a little bit more going on behind that 85 strike selection than we thought. Interesting stuff. I knew this one would raise your hackles, though, because you love a credit, not a debit. So that, be that as it may, if you really like it, maybe worth paying a little bit for it, but just don't tell he of the juice for free fame that you did that. All right, now it's time for us to keep on rolling. As Monday, listeners, means it's time for Uncle Mike to spread some wit and or wisdom. It's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, right, listeners, I know a lot of you guys tune in just for this segment to get the wit and or wisdom from Uncle Mike, little pearls of wisdom, like when to sell that 85 strike in the Qs because it's the low on the flash crash, and little nuggets like that. Uncle Mike, I know you have a lot in your repository of wisdom and perhaps indeed wit. What do you have in store for us today, sir?
A line in the sand, just to kind of go with it kind of adds to what the gentleman was doing with his trade on the Qs. I think it's important that you have a line in the sand of some sort. Oftentimes, especially when we have markets like this, oftentimes if you just say, well, I want to buy XYZ stock and it'll go up. And of course, we've beaten this point to death about how it's important to have a plan. If the market goes up, down, or stays the same, what do you do? What point do you get out? What point do you stay in? That type of thing. So that's one thing. But the other thing that I want to emphasize is that as you're trading, what's your line in the sand? For me personally, my line is on the open of the year. I should say the close of the previous year. SPY closed at 203.87 this past December. This past December 31st, to be exact. And so until we cross that line, I'm really not going to be overly bullish on anything just because that's my trading rule. Oh, don't get me wrong. There's plenty of things that I would love to buy, and there's plenty of reasons to buy this market for the long term. I haven't changed my sentiment on that. But as I've said a million times before on this show, never fear the market, but always respect the market. And so my way of respecting the market is that when we're negative on the year, stay out. And once we go positive, then you can get back in and you can start doing stuff, so to speak. Now, I'll still be in on maybe an occasional put spread here and there. I will get in on some lower delta type things if I really feel the need to it. But I have to be honest, it was kind of nice this weekend being for my SPY diagonal spread strategy, being in cash, not caring about what China did. Sunday night. No, don't get me wrong. I still looked at my quotes and still did what I always do. But I think it's very important that if you have a specific line in the sand as to when you're just going to say, look, this isn't my kind of market, and me being the ultimate bull with which I am, this is not my kind of market. So I need to be very cautious, and I need to recognize that, and that's my line in the sand. No matter what, you have some type of sentiment. So if you're a condor trader and you need a sideways market, if we had a market like we had in 2013, for example, that's not your kind of market. You would have gotten your face ripped off with an upside of 30% in the S&P. This past year, if you had wide condors, with the exception of August, you probably would have done pretty well. So my point for today is recognize what your strategy is and what kind of a market you need for your strategy to succeed. And if it's not that kind of market, folks, it's a lot better to be in cash than to just try to prove a point that you're a good trader in any market, by gosh. So that is my strategy block for today. Respect the market.
I think that's probably, there's one takeaway that I think has been beaten home to people over the past week, this worst start to the market in our history, is the fact that cash is a position. People tend to forget that, but I think as you just illuminated, cash, sometimes it's nice to be in cash and watch the vagaries of the market, the vagaries of the Chinese halts and everything else going on, and saying, you know what, that doesn't really impact me right now because I am in cash. I'm not saying we advocate always for cash here on the show, but it is indeed a position. People sometimes forget that there. And speaking of your rules, Uncle Mike, I'm glad you pointed that out because I was going to ask you, you obviously said your rules are to get back to around 203 in the SPY, but obviously knowing you, that doesn't mean you couldn't, if you saw an attractive, let's say, I don't know, 180, 175 put spread out there in SPY, put that on for a little bit of long deltas. Your rules don't prohibit that.
No, not at all. But what they do prohibit is it would be about a 20% position. I like to stay between 20 and 100 deltas typically per contract, and I would probably have to be in the 20s to do that.
Well, there you go. I have to follow the rules, sir. And does that apply for individual equities as well? Are you less? They have to wait till the SPY is back as well, or is that just on a name by name basis?
No, like right now, for example, on my SPY, the long equities for the most part, like in the hedged strategic night and in the hedged SPY, we're hedged right now, but we have some longer term puts on it. And so with that, our line in the sand is 185 to where the hedge with which we've set up for this year has been a kind of a knockout style collar, which is actually we're actually very happy with that right now because of the way that It's working thus far. And so when we get down to the 185 level in SPY, that's when we're going to start to buy to close some of the calls and roll down some of the puts and just kind of take some action along those lines. But more to come on that in the upcoming episodes. I'm kind of waiting for us to actually do something on that before I can go through it and as to what we do, why we do it, and that type of thing. But when we hit 185, it's going to be a long strategy block that day, I can tell you that much.
I'm looking forward to hear how the rules unfold in when we hit that 185 strike, or perhaps 203 or somewhere in the middle. That'll be interesting stuff. Meanwhile, though, it's time for us to keep on rolling. It is Monday, but let's squeeze in. I like to squeeze in at least one or two listener whenever we get a chance. So without further ado, we'll dive into a really quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, listeners, like the man said, this is the portion of the show where you guys get to join us and share your own wit and wisdom with us here on the program, as well as, of course, with your fellow listeners. And unfortunately, the power gods have stripped us of the rock lobster for the rest of the show. But he sends his well wishes, and we'll be sure to catch up with him again when the power is working, when the windmill is churning, when the water wheel from the creek is spinning to generate some power out there in the hinterlands of Maine. In the meanwhile, though, let's turn to some of you guys. Of course, questions at theoptionsinsider.com, probably the easiest way to go. Also, our website feedback form, twitter.com/options, facebook.com/theoptionsinsider, or indeed on StockTwits. We are Options Insider there as well. So find us on your platform of choice. Send us a question, send us a comment. Also hit us up via the app. It's all baked in there. We got this question, Uncle Mike, with great frequency. It's been a little while since we've addressed it on the show. Since we do a lot of UA on the show, it's worth bringing up again. It's beginning of the new year. I thought we'd kick it off. This one just came in a little while ago before the show. I said, it's about time to do a refresher on that. So without further ado, this one came from Pepe. He writes very simply, who is Paper? Who is this Paper you guys are always talking about? So this is about our quarterly, hopefully we can do it biannually at this point, a description of what we mean when we say paper. If you listen to the Odd Block segment, or if you read any of our unusual activity alerts on the website or elsewhere, you're always hearing us say paper this, paper that, paper. We're reading us say paper. What the heck are we talking about? Well, paper is kind of just this euphemistic catch-all term that we developed in the industry a long time ago for what essentially the customer was doing. The customer could be anyone. Usually, because we're talking size trades, it's a size institutional customer. Paper doesn't really refer to a 10-lot retail guy, even though technically I suppose it could. And it comes from the old days of the trading cards. You actually just rip off paper. There's a piece of paper that said, here, I have this ticket, and a broker would walk into your pit, and he'd have a piece of paper on a card with what the trade was, and hence the term paper. And it kind of has just lived on. All of us diehard old-school floor traders still use it, and it kind of still lives on in the lexicon of options. But Pepe and all of you out there who ask or are wondering a similar question, when we say in any of our unusual activity alerts, paper bought this, paper sold that, we just mean the customer. That's all we mean. Usually a size institutional customer or someone doing size. Chances are, if they're on our unusual activity radar, they're probably doing some size. So typically we refer to the institutional side, and that's what we mean by paper. We could also substitute trader or the customer, but paper is pretty much the generally accepted term. Hopefully that clarifies it. Hopefully that clarifies it for you, Uncle Mike. You always ask me behind the scenes, what the hell are you talking about with paper? There we go. I clarified it for you as well. You feel better?
Paper's long before my time.
Yes, paper was indeed before your days.
Know about any of that stuff.
In the hallowed halls of OX. All right, so that's going to do it for our abbreviated mail block today. Now we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. This is, of course, the portion of the show where we break down what's popping off for the week to come, what we're keeping an eye on. And back towards the tail end of last year when we were heading into a quiet holiday season, at least it's seemingly so, we were all kind of looking forward to pretty much the only thing we had on our radar was about this week, the middle of January, when earnings season comes back into force, kicking off today with Alcoa. In fact, let's see if they are out after a little bit of a rally. Closed $8 even after hours, trading right around $8.17. So Alcoa, as usual, that resoundingly exciting way to kick off earnings season, but they have done it. We'll see if all eyes can now turn domestically towards what's going on with earnings and actual concrete material things and big and small companies here in the U.S., or if we're all going to have our gaze pulled yet again overseas to crazy things outside of our control, like China melting down or escalating tensions in the Middle East, or indeed the threat of renewed weapons of mass destruction from crazy international dictators, et cetera, et cetera. Flip a card, pick a card, whatever it could be next week or this week could perhaps take our gaze. But I'm hoping, Uncle Mike, and perhaps you are too, that we can spend a few minutes looking at earnings this week, or are you still pretty much all macro all the time?
Well, I think that if we don't get good earnings over the course of the next few weeks, we're in trouble, because China's not all of a sudden going to fix itself. And I think we still have a ways to go with these oil problems. But if we don't get some good earnings over the course of the next month or two, then I'm kind of concerned right now, I have to admit.
How ironic would it be after all this Sturm und Drang over Q3 and Q4 and the Fed doing their ridiculous 25 basis point move if we get terrible earnings, terrible numbers going forward? Looks like our economy is slowing down yet again, and they have to dial that back. How ridiculous would that be?
Oh, it would be something. And you know what? They're starting to do some negative interest rates over in Sweden, I believe. So negative interest rates might not be out of the question. It would not surprise me.
I've always said, as go the Swedes, so go the market. So we'll keep an eye on Sweden. Of course, we have some numbers coming out this week, too. We do have Beige book, we have PPI, and retail sales, and see those. So we'll see. Perhaps those will feed into the narrative. I was joking, of course. I don't expect Fed to do any aggressive dial backs of their mere 25 basis point increase anytime soon. We do have, of course, later this week, starting to have some real names aside from Alcoa. We got JP Morgan on Thursday. We got Intel, my old stomping grounds, as well out there on Thursday. Friday, we got Citi, Wells Fargo. Usually Microsoft's on the heels of Intel. We'll have to see. It looks like they're not this week. They're spreading that out a little bit. Microsoft actually confirmed to be later, the 28th, around that fruit company's earnings. Of course, you don't care about that kind of stuff anymore, Uncle Mike. Things like the fruit company's earnings, those are behind you in the rearview mirror, are they not?
Hey, I still watch, and I have to be honest, it's looking mighty tempting at these levels, but it's just a wheel stock at this point. They need to start innovating, and then I'll become a buyer again.
What do the rules say about these levels in Apple? Where can you buy back in? 70?
When they get the iCar. That's more along those lines.
I'm not sure if you pay attention to it, there were a lot of rumors. There was a big unveiling of a Faraday car at the CES, Consumer Electronics Show, last week. There were a lot of rumors, and they still persist to this day, that was a stealth unveiling by a Chinese company that was operating as a front for Apple. And so that was actually the Apple car, which if you saw it looked like a Batmobile, and also seemed pretty pie in the sky, perhaps vaporware as much as hardware could be. All right, listeners. Unfortunately, we're going to have to leave it there with talk of Batmobiles and other fun stuff in your brains as we close out another episode of the Option Block. Of course, it's been a fun one. A lot of different places we stopped on this epic journey for today's episode. And unfortunately, we lost the Rock Lobster, at least from a show perspective, about 3/4 of the way through. So if you want to learn more about what those guys are up to, their webinars, their edumacation, all their fun stuff they have cooking over there, including their store for archived webinars, surf on over to optionpit.com. You guys know the drill by now. Surf on over, click around, buy some stuff, buy some mentoring. They'll be very happy that you did. They'll keep Andrew, maybe he can pay his power bill next month, so he'll be very happy indeed. And turning our attention to the land of RCM and our noted author here on the program, Uncle Mike. Uncle Mike, what's cooking off in the land of RCM and indeed your authoring future?
Authoring future, it's going to get pushed back another week. The BBI has been relatively high this past week, so we're still going to continue to push it back. But I promise you, listeners, that we will have information on where you can buy the second edition of Go Long, New Option Strategies for Buy and Hold Investors on this show. And in terms of other things that are going on at RCM, if you do have questions on how to market these turbulent waters, feel free to contact me at 312-212-3531 or shoot me an email at mtusaw@rcmfs.com. And tonight, the big college national championship. We'll see if the Clemson Tigers can pull it off for the first time since '81.
Clemson. Let me know if you need a nice forward for the revised edition of Go Long, aka long-term bullish, short-term cautious.
There you go.
The new version of that. I'm looking forward to seeing that on the shelves myself. Listeners, keep an eye out for that soon. Coming soon. And on behalf of Uncle Mike and indeed the Rock Lobster, and of course myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, and of course for sending in such great questions. We love to hear from you guys. Didn't have much time today. We'll get to more of them on Thursday, I promise you. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.